All right. Back to work here tonight. Another day comes to an end. Hope you guys had a fantastic day out there in the markets. But it's time to get back to work tonight, though. We got Non-Farm Friday right around the corner. It's Thursday evening. It is February 4th, 2021. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it is great to have you with me because my job tonight is to help us find the best trade setups for tomorrow, not just any Friday, Non-Farm Friday, first Friday of the month of February. Got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background. As you can see, we got the E-minis, we got the oil, and we got the gold on our radar for tomorrow. Big news coming right at the beginning of tomorrow's trading session. Had some big moves on the charts today as well. Big moves. Could we see some big reversals, some big ranges? I got a couple great setups we're tracking for tomorrow. I want to make sure you are ready for the action. Before we jump in, though, and get these charts all put together, the best setups for Friday morning, I just want to make sure to remind you, we publish this video newsletter every evening, Monday through Thursday, with our best trade ideas for the following day. So make sure you subscribe to our YouTube channel. That way you don't miss tomorrow night's newsletter. And don't forget, if you have any questions, drop those questions for me in the comments section below. I'll get them answered as soon as possible. And if you guys tune in every evening, if you enjoy this video as much as I enjoy making it every evening, hit that thumbs up. Give me a like button here on this nightly newsletter. So once again, make sure you subscribe. We send these videos out every evening. I want to make sure you get the next one. Drop those questions in the comment section below. And as always, hit that like button if you guys enjoy the content here on this video newsletter. But time is ticking. I'm a little bit late tonight. Let's not waste any more valuable time. Let's get into the charts. We got oil, we got gold, and of course we got the E-mini S&P. As you can see, lots of big moves on the charts today, right? Big move up on the E-mini, big move up on the oil, and of course the opposite, big move down on the gold. Now the E-mini was almost a straight line up today, right? Kind of a V bottom and a bounce going lower. There are two specific situations, ranges and reversals, that I want to be ready for tomorrow. So I got a couple different plans. One, trading ranges, right, if the market goes sideways, and two, trading a reversal. We got a bunch of magnets below us back from January's trading range. We'll talk about my favorite entry setups after non-farm payrolls to trade those ranges and reversals tonight on the video. So if you're an S&P trader like we are, definitely make sure you stay tuned for more on that. Over on the crude oil. Now the crude oil is interesting because crude, you can see here, had a nice V bottom, nice strong run higher. Very bull market, and there's plenty of space overhead, but we've got to get through some major areas of resistance. I got a pendulum swing, and the big thing is I have a top of an expanding triangle. If you watch my nightly newsletter, you know how much I love expanding triangles. There are really two basic plans on the oil for tomorrow, either trading a breakout running higher, get some levels up there, 58, 59, dare I say 60 for tomorrow. Maybe not 60 tomorrow, right? But we're looking for a breakout going higher tomorrow. Or will we possibly see a rotation back down again? Maybe some reversals. I would love to get short off these highs on crude oil. I got to make sure I get the right setup, though. We're not just going to sell this bull market because we're at resistance. So I want to make sure you check out the video tonight. I'll talk about the reversal setup I'm watching on the crude oil. And then, of course, over on the gold, of course, taking a bloodbath today. Big move down right into a trading range. We have very simple, one very simple plan for sellers. We are shorting pops tomorrow on the gold. I got a bunch of resistance levels overhead. We're trying to short those pops. Now, there are three types of pullbacks, right? We've talked about this before. We're going to go over them again tonight because you've got to be aware, three different types of pullbacks, okay? I want you guys to be watching for tomorrow. And then as we go lower, we don't have much space below us on the gold here, so we need one of those what's called a run and pop, We'll talk about this on the gold tonight if the market runs lower. And I'll tell you, I wouldn't be opposed to being a buyer on gold, but we're not quite yet at a major turning point. So I'm going to stay away from reversals, but I'll be open-minded to buying this thing if we do get the reversal tomorrow. I'll cover all the details as we dig into this video tonight. So S&P is ready, crude oil is ready, gold is ready. I'm so glad to see that you are ready right here with me. But before we jump in, though, don't forget tomorrow is Non-Farm Friday. We have a couple news events, but they're both at 8:30 Eastern time tomorrow morning. Now, keep in mind the employment number. This is the biggest news. Well, outside of any unexpected news, stuff that hits the wires here. This is the biggest scheduled news of the month of February. It's the first Friday of every 1 month. It's the employment number, right? Number of jobs added, the employment rate, right? Yada, yada, yada. Very big news report here tomorrow. It has ripple effects in every market, probably around the world, right? The global economy. So it's very, very big news. What you want to be aware of is overnight tonight, the markets will probably be relatively quiet. So you don't want to be forcing trades overnight if the markets aren't moving, okay? So if the markets aren't moving very much, and I would imagine with those big moves up on the oil and the S&P, big moves down on the gold today, I would imagine we're going to see relatively quiet overnight sessions. So be careful in the overnight. Now that quiet overnight usually results in a very busy reaction to this 8:30 news. What my job tonight is to get us ready for a couple different scenarios. It's very difficult to kind of anticipate what's going to happen in the overnight and in tomorrow, just because that big news. So my job tonight is get us our bearings, figure out where we are, where the major levels of support and resistance are, and put together a couple strategies to take advantage of the reaction. It's again very difficult to anticipate what that reaction will be, but tomorrow morning, once we get that 8:30 news, my job is going to be to wait on the reaction. By about 8:40, 8:45, we'll start to put together a plan again, right up to the charts, and we'll start looking for reliable entries, and of course, eventually exits tomorrow morning in the trade room. So be careful overnight. Be careful right up into this news tomorrow, and our job tomorrow is going to be, again, put the plan together tonight, but then really it all comes down to how does the market react to this news coming out tomorrow. Now, we saw a pretty good number on Wednesday, right? We saw a pretty good number on Wednesday. It was I think they added 175 or something like that on Wednesday. So the number is they've set the bar pretty high from that ADP employment number on Wednesday. A surprisingly good number for new jobs being added on kind of that appetizer, right? Remember the ADP employment number every Wednesday before that non-farm payrolls. So there's the bar is set pretty high for this employment number. If that employment number comes out dramatically lower, I would expect there to be quite a volatile reaction to the market, right? And that's where, of course, some shorts may come in with some reversals, but gold with a reversal as well. So we're definitely watching that reaction tomorrow. And then, of course, tomorrow's a Friday, so you've got to have a good reason to be trading a Friday after 11 o'clock. So early in, early out on a Friday morning. So again, be careful overnight. Don't force things overnight. Hopefully things move well for us overnight. But if they don't, you know what people are waiting on. Tomorrow morning, 8:30 news comes out. By 8:40, 8:45, we see the actual reaction to that news. I am not trading the actual news. I'm waiting for that crazy volatility to come down. The bid-ask spread narrows out again. The problem is if you try trading news, that bid-ask spread widens out. Very dangerous conditions to be trading in. You can't really practice trading news on a simulator because you're not going to get very realistic entries and exits. So it's a very difficult situation to trade on a live account. I always wait 10 or 15 minutes after that number comes out. Once we see the reaction, we'll put the plan either tonight, ready to capitalize on that reaction tomorrow. And then again, don't forget, 11 o'clock Eastern time. Usually what I'll do on a Friday morning is you can usually set your clock to the 10:45 kind of break there. Usually by 10:45 on a Friday morning, you'll notice that personality usually drops pretty significantly. Now, what I'll do on a Friday is I'll look to get into positions early in the morning, and I can always hold positions into 11 o'clock, 12 o'clock, even sometimes into the close if the market is really, moving. Usually it's pretty slow though after 10:45. So got to have a good reason to be putting more risk on after 10:45. And these days you don't want to be holding anything, at least not these leveraged futures contracts into the weekend. Now don't forget, tomorrow morning, 8 o'clock Eastern time, right? We'll be in our trade rooms. We'll have a front row seat for the employment number, the biggest news of the month, tomorrow morning at 8:30 Eastern time. So again, careful overnight. We're trading the reaction tomorrow. And again, early in, early out. You'll be able to keep those lunch plans tomorrow because 11 o'clock Eastern time, we usually finished up with trading on a Friday morning. All right, let's grab some charts here now. S&P's ready. Crude oil's ready. Gold is ready. Now, of course, we talked about the S&P in great detail all week this week, right? We've got last night's newsletter, bull market into a trading range, and our job was just to keep buying the dips, right? Well, as you can see, this is what happened here today. Market dipped right in the early pre-market, and then pretty much just took off to the upside. They went up and kind of overshot those all-time highs, which is not surprising when a market gets revenue engines like this. It wasn't like a runaway. It was just kind of a grinder, right? Today, a lot of volume coming to the market as buyers, right, try to get in before they retested those all-time highs. Now, if you look back in time real quickly here, look back at this move we saw earlier on this week, believe it or not, and look what happened. It was almost a very similar situation. Straight line up, right? And then notice what happened the next day? A range. That's very, very common. Whenever we see a market that gives you kind of those, it's not a straight line up, but, it's a very shallow pullbacks, right? Usually the following day will usually either be a range, right? Sideways range, or it'll be a reversal. If it's going to be a range, our job is pretty simple. Find levels of support below the range and simply combine those levels of support with what we call failure setups, right? So that is, chances are, and again, bear with me here, tomorrow's news report at 8:30 is a big variable right now. So we really don't know. We really don't know what's going to happen tomorrow morning, right? What we do know is a big grenade's going to go off at 8:30. But typically what happens, strong move up like this, trading range the following day. Or strong move up and we start to peel back. The buyers try once, the buyers try twice. And if you guys watch this newsletter, one of my favorite reversals are these nested reversal patterns or nested failure patterns as the buyers try, right, to buy the dips here. So these are, in a nutshell, kind of the two different types of plans that I have. Now, the market may keep going higher tomorrow, right? It obviously can keep going as high as it wants. But, typically, like I said earlier, typically when the market makes types of moves, we're talking ranging, right? And we're talking, or we're talking reversal for tomorrow. So we are at a major turning point. So a reversal is in play tomorrow. It may not happen tomorrow, but it's definitely in play tomorrow, unlike a market like gold, which is not at a major turning point yet. So let's kind of put this plan together here, because you can definitely see some areas of support that I like here. The first scenario, of course, is the range, right? First scenario is the range. And again, that is probably the most likely for tomorrow. So I'll kind of draw this up right now. We don't exactly know when exactly the range will be or where it will be, but let's just say we start going sideways up here, right, inside of a range. My job now is to find levels of support. So if I mark up that prior swing, we go sideways up here, right? There's my range. My job now is to find levels of support, and wait for that pullback. Once I get that pullback, 9 times out of 10, that moving average comes over. The bears will try to get short, right, going back down again, and we'll be able to buy right into their stop losses. Okay, this will be a trade worth waiting for tomorrow morning. All right, now again, non-farm payrolls, 8:30 Eastern time. This range might be a little bit higher, might be a little bit lower, but once we find that trading range, I'm going to, as I always say, I'm going to focus on failures, right, seller failure patterns underneath that trading range. Now, if the market pulls back, right? If the market pulls back here, this is where we start looking for reversal patterns, right? So we've got this all-time high up here, major turning point, big strong blast. Now imagine now we pull back, right? The buyers try once, we pull back again, buyers try twice. This is where I can start to connect these lows, start looking up at these highs, and I can look for my shorts now coming in. If I can get a trap above that high, great. If I can, what I want to do though is get some sort of resistance level that I can combine on the short side. Now again, a lot of this we'll be waiting on kind of how the reaction looks, how the overnight looks, but that would be a reversal setup that I'm waiting for here tomorrow. Another thing you want to think about here would be if the market jackknifes, right, and runs back down again. Now, if it just straight pulls back here, there's a good chance we go back to retest these highs. The only problem I have though is this momentum will be very, if we get that much of a pullback, right, into this kind of sweet spot here, so to speak, if the market gets that deep of a pullback here, that momentum is going to be a concern. And because of that, I'm going to look for a nested failure pattern. Bears try once, bears try twice. If I can get these bears to try to short this once, twice, right, what happens is all of their stop losses are sitting right above that high, and we can buy right into those highs for another kind of variation of a failure pattern, right? So those are, three kind of basic scenarios to keep your mind open for tomorrow. And don't forget, we'll be in the trade room tomorrow morning, 8 o'clock Eastern time. We'll be doing it with you guys. So again, if it's a range, right? And again, this range might be a little bit lower. You know what I mean? This range could be down here. It may kind of sink back in and go sideways there. Again, get those levels of support coming in, right? Find those prior swings. We'll know more tomorrow morning. Wait for that pullback and just wait for those bears to dig their own grave, right? And we'll buy into those stop losses. At the same time, if it was to pull back, one try for the bulls, two try for the bulls, now I'm going to mark that low, I'm going to mark that high, and I'll focus on getting short right off of that high. One try, two try. You'll notice I'm not trying to simply call the top on this. That would be a little bit crazy because it's such a bull market right now. So again, that's basically called a crown reversal pattern. And then the last one would be if we do just roll lower here, right? Let the bears try. What you notice is I got that new channel drawn up off those highs. What I really like is this area right there. Love this area right there. 38.43. Beautiful spot right there. It's a very deep pullback. The hard part's going to be if it pulls back a shallow pullback. If it's a shallow pullback, it's not going to be easy to buy into that prior high. So I'm going to really want to see a really deep pullback, which if you're looking for a deep pullback, a major news event like tomorrow's non-farm payrolls is exactly what we need for that. That could be exactly what the doctor orders. If we get that deep pullback now we just got to look for those bears, trying once, higher high, trying twice. Now we know where stops are, and we're going to need those stops, right, to get run up here as fuel, right, so we can push through the all-time highs or prior all-time highs and back up to retest those highs. So we're talking reversal patterns, we're talking failure patterns, deep pullbacks, right, into bear failure patterns. This, I'll tell you, I was just telling everybody in the trade room today, this is one of my favorite trade setups. Those strong runs, a deep pullback. Let the counter trend traders try a couple times and then just buy right into their stop losses. I cover this pattern, these failure patterns in a lot more detail in our free trading course. If you're trying to get more consistency in your trading results, get your confidence going again, definitely check out our free trading course. The little pop up there in the upper right-hand corner for you. As part of the free course, you'll learn all my favorite setups, my failures, my traps, my strength setups, right? You'll learn all the stuff we use in our trade room, and you'll get a better grip on the patterns I'm talking talking about here on this video newsletter. So again, if you're trying to get consistency in your trading, you definitely want to learn these pullback, these failure patterns, because they're really some of my favorites right now. Now, another topic would be, of course, if the market keeps on grinding higher here. If we keep on grinding higher into a spiking channel, it's possible. It's not likely just because of such a big move today. But if we do end up kind of grinding with a spiking channel, just remember that the base of that channel is usually the magic place to buy the pullback. And what I would do in that situation is wait for that pullback. That'll take us well underneath the moving average. Look for a seller failure into a pullback combination to retest those highs. All right. So, again, it's not likely, but it's definitely possible. Anything's possible here right now in this crazy markets we're dealing with, right? So if we do start grinding higher here overnight, what you want to think about again is just where's that first pullback, right? That's your sweet spot right there. And just simply wait patiently for it. This, again, will put you below the moving average. And this is where you get those failure setups, right? Deep pullback. Let the bears wrap that rope around their neck and buy right into those stop losses, which will usually just snap, right? Nice little short squeeze and snap right back up to retest the high. A lot of times you'll get that failure, and then just before it runs, it'll pull back and go. So failure pattern, pullback pattern, right? If the market grinds higher here as we go. Now, I'm sure there are some scenarios I didn't cover here tonight, right? For example, a reversal, right? How would a reversal look like? If the market runs lower and they hold the pullback and they jump off the moving average, what do we call that? We called it a 1, 2, 3 reversal pattern, right? So 1, 2, 3. If they do get that reversal, again, I'm not going to sell the first one, right? I'm looking for the bears trying a couple times to buy it back up, right? So I'm not going to sell the first one, but if they can get that 1, 2, 3 and they can jump off the moving average, now we know the bears are back in control. They're likely hunting for a retest of today's low, and it's a pretty easy plan from there. I can mark that low, I'll mark that high, and I look for that first test is the best test, right? As we always say, which is usually going to be a failure pattern, pullback pattern, and then towards the end of the move, a trap pattern. Now, again, I cover all of these setups in that free trading course that I mentioned. Failure pattern, pullback pattern, trap pattern. So you can go into more detail as part of the free course. But if we do get that rolling over, we can definitely anticipate where these bears would like to go, right? Back down to retest those lows. So will we get the range? Will we get the reversal? Only time will tell right now. Just please be careful here overnight. And again, be very careful tomorrow around that news tomorrow morning. It's about 8:40, 8:45. We'll know how the market reacts, and we'll go from there. Next up here, how about some oil? Oil, boy, now we talked about this in a lot of detail earlier this week. Oil has plenty of reasons to keep going higher, right? COVID vaccines are up. COVID vaccine cases are down. Production cuts at OPEC. So there's lots of reasons to be bullish right now on the gold, on the black gold, as they call it, right? The Texas T, the crude oil futures. Right now, the key takeaway here on oil is we had that bull run higher, and you'll notice it kind of developed into a big wide trading range. Now, whenever we have a bull market with a wide trading range, we know our job is to buy below the low of that range, just like we talked about on the S&P, right? So that's what's going on right now. Now, if you know me, or if you watch this video, this newsletter, you know that anytime we have a range, one of my favorite support and resistance levels to buy low and sell high in a range, because after all, ranges are magnets, right? We look for support areas to buy below the range, resistance areas to sell above the range, right? And we talk all about range-bound markets and how to trade them in the free trading course, like I mentioned earlier, right, in the upper right-hand corner. But you know me, I love these triangles, right? Love me some triangles. So the market will oftentimes, when it goes into a range like this, right, it'll bounce off triangle, 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 and you'll notice we are right now. So we're very bullish. You don't need me to tell you that. that, right? We have a bullish rotation. We are up at major highs here right now, right? Back to major highs there, up at resistance highs, right? Top of that triangle. So lots of resistance overhead. You can see I even, right, measure the pendulum swing. The amount of the move below the range is the amount of the move above the range. All right, so we know we're very bullish, and we know we are quite concerned about buying into resistance up here. That range below us acts as a magnet. So, of course, the bears, right? The bears would love to look for a reversal, go back down into that range. In fact, I really like that idea for tomorrow. But at the same time, though, the bulls have a very strong move higher. I wouldn't be surprised if we see a breakout higher here tomorrow into a spike in channel, and we start picking these bottoms and looking for that deep pullback, right, later on in the session tomorrow for oil. So those are kind of the key takeaways. We may go sideways up here, right? That's a possibility. We'll see, right? It'd be more likely, I think, to come crashing back down and then settle into this range from earlier on in the week. But those are the kind of the three scenarios that I want to be ready for. So first of all, if the market goes higher, right? If the market goes higher, where do we think the buyers are hunting for right now? Really, there's not a lot else up here. We talked about this last night. I mean, you've got to go to 58, almost 80, 58.72. You got to go well almost to 59, right, to get that next kind of level here, right? We talked about a weekly chart last night on the newsletter. There's a lot of open space overhead. So really, if you double up that big leg higher, that puts you at a measured move. That is where we assume these buyers are going to try to go for tomorrow. Now, real quickly, if I kind of let's get rid of that triangle just for a second here, because here's what you want to think about if this market goes higher to be a buyer. Right, to be a buyer, what I want to see is, you kind of see I put a little cheat sheet here of this channel. As the market goes higher, if we can get this run up going higher here now, I can now draw a trend line across those highs, bring it down to that low, and I can now look for that first test off the low of this channel. Now, typically what's going to happen is when this thing pulls back, it'll be below the moving average. So my favorite way to trade the low of a wide channel like that is to wait for sellers to try to short this thing, right? They're trying to go back into that range, wait for them to get short, and just simply buy into those stop losses. Now, generally speaking, you can use this kind of pattern setup, 3 touches of the low. So 1, 2, 3, right? So 1, 2, and then 3, right? So if we can get that tomorrow, okay, again, what we can do is the first one obviously is what sets it up. Second and third ones are usually very tradable. What you want to be aware of, though, if you want to be aware of, though, is that usually after that third one, you're probably going to get your deep pullback, right? So buying the low, buying the low, buying the low. Once we have 1, 2, 3 now you've got to think about that deep pullback. Now, like I mentioned earlier, the base of that channel is the sweet spot. We don't always pull all the way back to that base, but just imagine, though, we go 1, 2, 3 legs higher here. You got to be thinking, expect that nice deep pullback. When we get that nice deep pullback now, this is the best, usually one of the best opportunities of the day. It all depends on how deep that pullback is. If it really pulls back the way we hope we'll get tomorrow, it'll be such a strong pullback, it'll feel like it's collapsing. And because of that, you want to use one of those nested entries. 1, 2, once those bears try twice, now you got them right where you want them. Their stops are sitting ducks. And what happens a lot of times on these is you'll get the stop run into a bear trap before the market retests that high. All right. So again, kind of roll with me on this, right? The first two pullbacks are generally going to be those pullbacks, those failure patterns, right? Off of those lows, right? So failure patterns around the lows there. And then once you get that really deep pullback, That's when momentum becomes a concern. Let the bears try a couple times, right? You got what we call a nested failure into a trap combination for that retest of the high. So we'll be watching for that here tomorrow, right? Now, again, that requires another strong move higher, right? And keep in mind, too, this channel might be steeper. I'm just simply kind of putting the channel on there just to kind of give you a little bit of runway to think about for tomorrow, okay? Now, how would I trade the reversal? Well, the reversal is now in full potential here because now we've got to retest the high, right? Market goes up, they now have to retest the high. This is what we definitely are looking for, that 1, that 2. I like to draw a trend line off that low, up around that high, check out that swing. That's your sweet spot right there, right? That is your sweet spot right there for the reversal. It's called a crown reversal pattern. 1 try for the bulls, 2 try for the bulls. In all reality, I'd like to get one of these tries at least underneath that low, right? Because if I was a buyer, that'd be a good spot to look for a trap, right? Buying that low. So ideally, that will be part of it for tomorrow, right? So we get this push up. Let me draw it a little better here, right? Push up. We pull back now. Buyers try once. Buyers, right? See how we're underneath that low now? That's good because now we know everybody is in, right? I mean, everybody's in. Mark that low. Mark that high. Look at that swing high. Great. That will be a fantastic short setup for tomorrow. And again, you might have to wait for it, right? Overnight session could be quiet. News comes out tomorrow. We may have to wait for that type of short setup, right, as we go. So be aware of that. And then again, the other scenario I was talking about is maybe they go sideways up here, right? Maybe we spend the entire evening overnight going sideways. Every once in a while we see a range break out and go into a new range. It wouldn't be the first time we see a market go up, go into a range, and then something changes, breaks out, goes into a range. There's nothing wrong with that. It's not that common, but hey, we'll trade it if we get it. So if we get that range up here, bull market up into a trading range, what do we do? What's our job? Our job is to find support levels, right? Like swings. What I always like to look for, as I mentioned before, is I love those expanding triangles. Right? I love those expanding triangles. So if it goes sideways overnight, I'll be looking for those, right, expanding triangles there, right? Find those support levels. And then what do you do with support? You wait for the pullback. We don't try to buy that support level. We wait for the bears to come over. They'll try to get short going back down in. The problem is if we hold in a range, that puts a big magnet right in the middle of that range, and we'll want to use that magnet to our advantage. So wait for the pullback and use one of those failure setups to buy below the trading range. All right? Buy below that trading range. So that's how we trade a range. And then if it does range, what would a breakout look like? Just so you know. And this would apply to the S&P tomorrow too. If the market does range here, right, we're using failure patterns to buy below the range. How would we break out of the range? There are 2 types of breakout patterns, right? If you recall from earlier on this week, one is the 2-try breakout, strong move up, shallow pullback, higher high, and a trap low. So if we do go overnight into a range, the news comes out tomorrow, bam, right? Blasts off. We see a strong push up. We do not want to chase the breakout. It could easily go up and come right back down again. But if they can get a strong breakout, a shallow pullback to the moving average, a higher high in price, little trap low there, that's great. Or if the market, again, if we ranging out here, and the market jumps 1, 2, 3, again, I'm not going to buy the first pullback, but I will definitely buy the second one, right? Because anytime we see a 1, 2, 3 breakout pattern, right? 1, 2, 3 breakout, we know the first test is always the best test. Right? So if it does go sideways, 3 possible, right? 1, 2, 3 breakout, 2-try breakout. And again, your typical seller failure. And again, guys, I cover all these setups in that free trading course. Not to mention, I'll send you lots of examples of how we apply those setups to our favorite futures market. So be aware of that. One thing you do want to be aware of is if we were to get this reversal, 1, 2 back down in, right? Be aware if we go back into this range, we don't want to be trading inside the range. This could easily flip into a bear market, into a range. What do we do in a range? We sell high, we buy low. What? At resistance areas, right? Now, again, we'll know more once we get there. We'll find resistance areas overhead, right? Trend lines, expanding triangle lines. We'll wait for the pop, wait for those buyers to try to get long, and we'll just hit them right where it hurts, right? At that point now, momentum is bearish now. There's a big magnet right inside that range, right? Anytime you see a range, think of a magnet, draw on that price down. If the market pops up, wait for the buyers to get in and just short right into where their stops would be there, right, for that move going lower. And then if things really get crazy, right, if we run back into the range, we pull back to the moving average and we jump off that, what's that called? 1, 2, 3 reversal pattern, right? What do? Mark that low, mark that high. First test is the best test. I'm going to want to get in on that, though, before we take out these lows. All right, before we take out these lows. Because once we get down to those lows, we now know that range overhead is a magnet. How would I buy that low? With all of that momentum, let me see if you've been paying attention this week in the newsletter. How would I buy that low? I'll give you a hint. It's right there. It's right there. How would I buy that low? All that momentum, right? Great location. Bad momentum. If you watched last night's newsletter, how do you buy that low? You give the bears one try. You give them 2 tries. You don't just try to buy the low. Because for all we know, it'll roll over and keep going lower, right? Let them try once, let them try twice, and hit them and use that magnet right overhead, right? So know your boundaries, right? Major support down here, major resistance up here. I can sell the highs with that crown reversal. I can buy the lows with a similar setup. This doesn't even be as perfect as a reversal, right? Because it's of course a overall bullish market right now, but that will be a fantastic way to buy off of that low. All right. I've tried to cover as much as I can tonight on this video, but I'm sure I missed something. So tomorrow morning, you know where to reach me, 8 o'clock Eastern time in our trade room. I'll make sure you guys are following those rules and getting that consistency going in your trading. Let's wrap things up now with the gold, shall we? Now, keep in mind, gold is probably, not always, but probably going to be the most difficult market for tomorrow, just because it's Non-Farm Friday. Hopefully I'm wrong, right? But anytime you got jobs, and those jobs will probably, determine monetary policy and, the U.S. dollar and correlations with metals, right? So gold does tend to be a little bit squirrely on a Non-Farm Friday. Hopefully I'm wrong, right? Sometimes I am on that, but we'll see what happens. What's the key takeaway here on the gold? It's a strong run down. Great example here of we saw a range yesterday, right? And the market pretty much just broke out 1, 2, 3. What do? You mark up that low, you mark up that high, and you sell the high. We talk about this. That's all it is, a 1, 2, 3 breakout. That's all that is, right? It's a 1, 2, 3 breakout pattern. Market breaks out, 1, 2, 3, mark that low, mark that high. First test is the best test, right? And then as we go lower, what do? Look for traps, right? Look for traps. So the bottom line is we know we're bearish. It looks like they finished up the session with a trading range. So they've made our job a lot easier because we kind of know what's going on. The one big difference about this one is I don't think we've reached the big turning point yet. 1771.2 is a major low. You gotta go back a while to see that major low. I don't think I have a weekly chart here nearby. Where is it? Hold on. Let me get it here. Oh, come on, Joe. There we go. There's the weekly right there. If you go to weekly on gold, you'll notice there's the right there, right? So you got 1771.2, right? And then down from there, we're going back into this range, right? 1750 to 1800. So we're not quite there yet. The moral of the story is we're not quite there yet, right? I love trading reversals, guys. I do, but I got to be at a major turning point, and you can see by this chart we're definitely not quite there yet. So we're not quite there yet, but right, that level is right below us at 1771.2. Sorry for the confusion there. So we know we're bearish. We're in a range. Our job right now is to sell the pops, right? That's simple as that. I want to find levels of resistance above this range. I can zoom back in now because you can see where I am. Okay, so we know the market's bearish into that trading range. Find levels of resistance above the range. So of course, you know me, I got my expanding triangle, right? I've got my hidden channel. If you go back here, I like this one a lot. I like that channel a lot because you can see where it puts us right up in that area right there. This, of course, 1804, 1807 area, that's the big low from back there. It's pretty much January's low, right? Back there at, January 15th, January 16th, something like that. So we know that area is a prior support level, which will now be an area of resistance. So resistance there, the range below us acts as a magnet. I mean, this makes our job very simple. We know the range is a magnet. We want to short the pops. And what's the best way to do this? Do we try to pick a top on this? Right? Do we try to, do I try to figure out where the high is? No, I don't. Pardon the term, but that's a rookie's game, right? Trying to get perfect entries is a rookie's game. I don't want perfect entries because perfect is usually going to come at a cost of perfection, right? We don't want perfect. We want profits. So what I want in. I don't want to try to pick a top on this. So as the market goes higher, if I can get rid of this trend line here real quickly, if we can get up in this area here, this is where those three pullbacks come into play, right? I want to short the pops. We know that for a fact. So the big question we have right now is do we get a shallow pullback? Do we see a deep pullback? Or do we really see a spike, higher here? For example, if I have a relatively, for example, if we pull back, right? And then what happens sometimes is you get these failures. That's what I want. I want a failure pattern. The ideal scenario is we get up into resistance. The buyers come over. They try to buy that pullback. We've got all this wide open space now to tumble back into that range. And we can sell in stops. We can sell a pullback on the way into it. That's kind of the ideal scenario, right? That's the ideal scenario. We are selling into stops with a failure pattern. And we're selling the pullback, right, as it rolls over. Okay, in that situation, your target is the low of that range, right? And then the pendulum swing. Measure the amount of the pop, project that down. That makes sense, right? So however the move above the range is, we simply flip that around and put it down there. I know it's a little bit tough to draw that right now, but that's where your final target goes, right? And that might end up being right on top of that 1771 area. So that's kind of the ideal scenario. But what if we really jump? You know what I mean? It could easily happen. Not a lot of volume changed hands here. So, if you were to look at a volume profile right now, it probably looks something like this. Right? Like that. So there's this wide open space up there. And if you know how volume profiling works, and you don't really need to know it, to be honest with you, but this is kind of an interesting way to look at it. If you know how volume, right, a lot of volume is sort of there. So sometimes what'll happen is, right, the market will pop, try to get in that area here, and then come crashing back down again, right? So it's not a guaranteed reversal if we get a pop. And considering how much the market spiked lower, there's no reason why it couldn't do that. So if it does get that strong pop, especially after non-farm payrolls tomorrow, okay, what do we do? Well, what's the problem? The problem is the strength of that move. Anytime we see that much strength, the buyers are going to pitch a fit trying to retest that high. So I'm not in the business of calling tops. So what I do on this is I'll wait for them now to try once, try twice. Now, I don't need that trap at this point, but that would be a cherry on top, right? A trap would be ideal. What I really want, though, is to see these buyers try to take a couple swings at it, right? Let them try once, pull back. Give me a trend line, right? Let them try again, and I'll short out that trend line, okay? Again, the idea is it's a very strong pop, right? And as you can see, there's a couple different variations of these types of failure patterns. I call them nested failures. And the reason why I use this particular example is because if it really jams higher, okay? If all we get is a shallow pullback, We got this kind of sell zone, the round number up there. Let's just say, for example, the market goes sideways here for a little while longer, and all we get is this little tiny shallow pullback like this. Okay, this is the stuff you're going to be careful with because you don't want to sell too low. It's going to be difficult to attract bears into that type of pattern. What happens a lot of times though is you'll get this 1, 2, that trap and go. All right, traps are great when you're running out of space, which is exactly what will happen in this situation. Does that make sense, guys? Right? So again, deep pullback, not a reversal, deep pullback. Buyers once, buyers twice. Maybe we draw the trend line like that, right? Maybe that's the pattern. But again, bottom line is 1, 2, dump it back down in, right? Relatively deep pullback. I've got buyers coming in, buying the pullback, and we can short pretty confidently into those stops. Shallow pullback, I don't want to go too close to that range. Wait for the pop, right? Wait for the pop and short that sucker from there. We're selling the pops. Now you're probably wondering, okay, Joe, at what point does this thing turn bullish then, right? Well, it has to hold the pullback. So first of all, it's going to be a relatively strong pop, but most importantly though, it has to hold the pullback and go. Right? It's got to hold the pullback and go. We have to see one of these 1, 2, go. Then I can mark the low, mark the high, and I can sell off that high. You can see an example right there, right? So that pattern back, the opposite direction right here, right? So we jump up. Again, buyers try a couple times. They fail. See ya. Back into the range. If they hold this and go, and again, believe me, I don't like to miss that. I'm not missing it. I don't trust it. That is not a very reliable entry. And if you're trying to get consistency in your trading right now, you've got to understand that when the market is bearish, you can't trust a pop off the low. It's probably just profit taking, right? So you got to be careful with those first pullbacks there. You'll get a much better result long term. Of course, some of them will work, right? Even a broken clock is right twice a day. Those pullbacks will work. The problem is you can't tell the ones that work with the ones that don't work, right? That's the problem. You can't tell those ahead of time. Okay, they're just not reliable enough. The probabilities aren't there. It's too bearish. But once they do hold, then we know we can mark up that high, mark up that low. And remember this sequence, right? It's usually a failure into pullback, into trap, right? Remember this sequence as we come off of that channel low. Right? Because what happens usually is we get underneath the moving average. When we get underneath the EMA, bears get trapped, right? Seller failure. We then go above the moving average. All the bulls now are confident, right? This is usually where the masses jump in. The deep pullback is the pro entry. The pullback above the moving average, that's where everybody else jumps in because now they're convinced. And then of course you've got your trap. Right? Your trap is the one you got to be careful with because you're late in the move now, right? Now you're 1, 2, 3, right? Now you're buying it at a premium price, and so you want to find the lowest possible way to get into it to protect yourself against what's called a stop and run, right? Where you buy the pullback, it jams up and stops you out and runs without you. That's how you avoid that stop and run. Again, if you want consistency in your trading, you have to understand where you are, right? It's too early right here. You got it. Your job is to hit it right there. That is your job, right? I don't care how it looks. Your job is to hit it right there. And then later on in the process, stay patient for that trap, right? Because your patience will pay off, right? You don't want to keep buying it as it goes higher. So that's how we trade it as it goes higher here. And of course, as you can see here, that range overhead, right, is a magnet. The most difficult part of this is going to be if we just go sideways here. We got to wait, right? Got to wait. Short the pops, back down in. If the market runs lower, we have that major area of support. This is definitely where a strong move down, bears try, right? Bears try once, bears try twice. This is definitely where a reversal pattern will come into play tomorrow. Okay, so we'll definitely watch that off a major turning point. If you want to sell it as it's going lower, we need what I kind of call the run and pop. So if it runs lower, what you're going to do is get a strong move down, and then before we get to that low, a nice pop. We'll use that low, and we'll look for that. Again, I call it a run and pop. And basically what it is it's a strong momentum move that gets people going. You don't want to chase it because you know you've got support down there. You wait for the pop, right? People take the profit early. Wait for the pop. Again, run and pop. Use the underbelly of the range, right? We'll use resistance levels to combine those resistance levels with a buyer failure as it goes above the moving average. Rope in those buyers, run those stops, and that fuels it to run back down. It's a more advanced tactic, right? I kind of call it the run and pop, right? Or the pop and play, whatever you want to call it. But you're basically driving it lower, getting a bunch of rookies to chase it. It pops against them. They get fooled and think it's a reversal. They buy the reversal. We've all been there before, right? And sure enough, it picks our pocket and runs back down again. All right, guys. So as you can see, we have a lot of different options for tomorrow. I wish I could have a crystal ball to know what the news will look like tomorrow, but we'll wait and see what we get here at 8:30 Eastern time tomorrow. And don't forget, tomorrow morning, 8 o'clock Eastern time. Again, a lot of my clients, you might be included, bad habits. My job tomorrow is to make sure we're breaking those bad habits, following our rules religiously every day, looking and qualifying the best setups together. I would love to have you there, right there with me. You can get registered. It's very easy. Right, follow the link. I'll put a big link for you guys below the video tonight on the trading blog at Sideways Markets. I'll put a link in the description of the YouTube video. Grab that link, get registered. We open up tomorrow morning at 8 o'clock Eastern time. And it's not too late to call me in the office. I'm here in Los Angeles, so West Coast time zone is still pretty early here. So don't be afraid to pick up the phone and call me in the office. I can walk you through the registration process so you're ready for tomorrow morning's trade room. Get the orientation, get the checklist, and, of course, get the software installed so you're ready for Non-Farm Friday. If the telephone isn't a good fit for you, don't be afraid to use the live chat on the left, live chat on the right. I get the comments in the comment section below. And I hope by now you've subscribed to our YouTube channel. I hope I've earned a thumbs up or a like button from you at this point now. I hope you'll tune in tomorrow morning in the trade room at 8 o'clock Eastern time. We don't do the newsletter on Fridays. So of course, I'll be back for a full week next week. At a holiday weekend coming up next weekend, right? President's Day, Valentine's Day, guys, gals, you know who I'm looking at right now. Don't say I didn't give you a heads up on that. You don't want to be waiting the checkout line next Thursday, Friday, acting like a fool, right? So take my advice, right? Get it done. Get it done this weekend. I'm kidding with you, obviously. Have a fantastic rest of your evening. If we don't see you guys tomorrow morning at the opening bell, make sure you come back and see us next week on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.